Good morning, everyone. Morning, good morning, good morning. Or good day, depending on where you're from. Good morning. Hello, and welcome back. Good morning, morning, good morning. Very excited to get back on here with you guys. Start 2025 off on the right foot. Today will not be any price action. Market is closed today. We have a few other things that we're going to do today. I'll give it a couple minutes for people to join first before I get into any of the announcements. Take a moment to say hi and good morning. Say Happy New Year's. Hope everybody's ready to start 2025 off on the right foot. And that's what we're going to do here today. We're going to put together an actionable plan so that we understand how to move forward in 2025. Good morning or good day, depending on where you're from. Hope everybody had a great time celebrating the new year and the holidays. For anybody that celebrates the holidays, Merry Christmas, Happy New Year. Time to lock in for 2025. We'll give it just another minute or two for more people to join, and then we'll get into the information. Morning, good morning, good morning. See who we have here today. Morning, Justin. Good morning, Mike. Morning, Tad. Morning, Mint. Good morning, JKB Trades. Good morning, Luke Trader. Good morning, Mr. Reckless. Good morning, Kevin. Good morning, Jason. Good morning, Invesco. Good morning, Trader Kyra. Good morning, RT Money. Good morning, Jack. Good morning, Kevin. Good morning, Rashid. Good morning, Evan. Good morning, Ronnie. How's everybody doing today? Once again, good morning and Happy New Year. This morning, we have a giveaway. We have two 50K accounts for My Funded Futures to give away. We also are going to go over a new PDF, and then we are also going to go over the Unicorn Model PDF. So we have a couple things to do here this morning. It's going to be a shorter stream because other than those three objectives, the market is closed for today. So take the time to save the mental capital, do something good for the soul. For me, I will be preparing for 2025, and that is exactly what's going to happen here on stream. I'm going to go over the model. We're going to put the pieces of the model together. That way we understand exactly how we will be engaging with the market this year. That way we have a roadmap, an actionable plan to how we are going to move forward with our trading. So if you haven't already, please do me a favor, like the stream, sub to the channel. That way you can be notified for whenever we do any more live streams. Throughout 2025, we have been doing live streams every Wednesday here on YouTube. And then Monday, Tuesday, and Thursday live streams are in the Discord. So very excited to get to work for 2025. Happy New Year. Happy holidays. Time to lock in for 2025, and this is exactly how we are going to do it. So, if you haven't already, you can get a copy of this PDF in the Discord. All you have to do is join the Discord, and then you go to the education section. You will see that there's a unicorn model thread. That is where anything related to the unicorn model can be found. If you'd like to grab that PDF so that you can walk through this PDF at the same time that I will be walking through it this morning, it'd be a great way to follow along. So hopefully you got your coffee. Hopefully you're ready to go. Let's put together our game plan for 2025. All right, so let's take a look. For anybody that's been following me, for anybody that's been in the community for however amount of time, you would know that I engage with the market with the unicorn model. We're going to go through the unicorn model. We're going to put together a game plan, and then we are going to go into depth about the unicorn model. So starting with the game plan, very simple 3-step model, and we're going to go through each one of those steps now. Always going to begin with time. Time is our most important element. Here are the times that we deal with. So the first thing to understand is that we always want to be understanding what works best with our own daily lives. Okay, so you might have different responsibilities throughout the day than I might have. So whether I choose to participate during New York Open, that might not work best for you. So when we're going through this information, you have to fit the model to yourself. We have to be independent thinkers. We have to take self-ownership in understanding what works best for ourselves. And this is not a guessing game, right? We understand which times are important, but we know when to execute. It's just a matter of taking self-ownership in knowing when you can give your undivided attention to your business. Right? So, for example, if you have a day job and you normally work from 8 a.m. in the morning to 4 p.m. at night, then you might not be able to participate in New York session like I participate in New York session. So that's where you understand yourself and you sit there and you say, London session might be best for you because you can give your undivided attention to the market. Either way, what is important is that if we're participating in indices, right? If we're trading ES and NQ, that is what I trade the most. So that's what we're talking about here. When we trade ES and NQ, here are the sessions we should be focusing on. Participating in Asia, participating in London, or participating in New York. Now, in my opinion, less is more. Quality over quantity. You don't need to participate in every single session. Right? I don't think over trading is the way to move forward. In my opinion, you should just choose one session and focus on that one session. Get really good at doing one thing. Right? So I live in the US and I'm on the East Coast. So the best time for me to trade is New York Open. That's why you see me here on all my live streams focusing on New York Open or ES and NQ. Choose which session works best for yourself. Now, if you're going to focus on forex, right? If you're trading EU, GU, Dixie, if you're going to focus on forex, just understand that the only difference in the forex opening times is New York. Okay, New York from 7 to 10 is the New York Open for forex. Same exact thing. Pick one session. Understand what works best for your daily life and focus on that one session. Okay, so step number 1 to this model, step number 1 to this game plan is always going to be time. There's additional elements to time that we're going to go further into depth during the second PDF, but this is where it begins. We're putting together our actionable game plan. We're understanding what works best for our daily life, and we're choosing which session we are going to focus on, and we're understanding what the important times are. The important times are the opening times. We want to be participating. If you're participating in London, you want to be participating starting at 2 o'clock, in between 2 o'clock and 5 o'clock. If you're a trading New York session, you want to be starting around 9:30 up until 12. Pick a session, focus on that one session. The game plan starts with time. Once you can define that, then we can move to step 2. Step 2 is going to be our bias or draw on liquidity. Essentially, those two words mean the same thing. Whatever price is reaching for, wherever price is moving, we need to understand our draw on liquidity. We'll get some examples during the second PDF, or we can even go to the chart and go into replay mode after we're done talking about the PDFs, but this is how I determine bias. When I'm determining bias, looking at the daily chart, on the daily chart, I'm looking to understand where price is currently located. Price is either located above a swing high or low, which would be considered external liquidity, or it's located at a fair value gap. Fair value gaps are internal liquidity. If price is not located at one of these locations, then I will simply not have a bias. Okay? Anytime you can't define price, anytime you can't define time, that would be a moment where you should be doing nothing. Just sit on the sidelines and wait until you can define it. Very simple. We have to go into 2025 with discipline and patience. The way that we even get to discipline is understanding our game plan. If we know all the justifications to our actions, then it's very clear how we should be doing something, when we should be doing something. That's where the discipline comes into play. If you can consistently carry out your game plan day by day by day, and how long can you be disciplined? And then that's also where patience comes in. If you know exactly what you're looking for, and that is not currently on the screen when you're looking at it, then it comes down to being disciplined in your model and only sticking to that model. Having the patience to wait until that model appears. And that's exactly why I just said what I said. We need to have discipline and patience in the model. We need to understand the justifications to our actions so that we can implement those characteristics. So when I'm on the daily chart, I'm looking at swing highs, swing lows, and FVGs. And it's very simple. We do not need to make it any more complicated than this. When price is currently located inside of a bearish FVG, we would have a bearish bias. When price is above a swing high, we would have a bearish bias. When price is currently located in a bullish FVG, we would have a bullish bias. When price is currently located below a swing low, we would have a bullish bias. Now, the important part here to understand is that a bias simply just needs to get you in and out of a position. Okay? You do not need to predict the next 10 daily candles. You don't even need to predict where the current daily candle is going to close. All you need to do is get in and out of a position. Right? So if you're bullish and at New York Open, you get a bullish unicorn, Go in there and execute it with strict risk management. And then when you're done and when you get a result to that position, be done for the day. And that's what I mean about bias, right? Who cares what happens after the position? Who cares if it goes and closes much higher or lower? The only thing that matters is you engaging with the market. When you engage with the market, it has to have strict risk management. When you engage with the market, you should understand when you're going to do it, meaning time, our first step. And then you should have an idea on how you're going to do it, meaning bias. The bias is that idea. When you're on the daily chart and you see that price is located inside of a bearish FVG, that is why we would be looking for lower prices. So then the how then comes down to your entry function, which that would be the last step to our game plan. Time being the first step, bias or draw on liquidity being the second step, then the third step being entry function. Now, I'm not going to sit here and say that there's one entry function that's better than the other. Everybody has their own model. That's completely okay. It doesn't matter which model you use, but in my opinion, the only thing I can say is system hopping, right? Trying to use too many tools at one time is a bad idea. So the only thing I do have to say is no matter what entry function you use, you should stick to one of them. That way you can clearly define it, right? Whether you're using support and resistance, whether you're using EMAs or any type of indicator, whether you're using inversions, whether you're using order blocks, whether you're using unicorns, it doesn't matter what you're using. Just know which entry function you're going to use so you know how to engage with the market. And that's exactly why we're putting this game plan together. If we know when we're going to execute, meaning time, then we have a defined slot of time that we look at the marketplace. So you don't have to concern yourself with anything outside of that window of time. It's very defined. Same thing with bias. If you're capable of developing a bias, then you would be capable of only looking at one side of the marketplace. Right? If you have a bullish bias going into the market, then you know that you're only looking for long positions. And now that we're getting to the entry function part, we know what to look for when we're bullish. Right? So if you have a bias, it keeps you on one side of the market. If you're bullish and price is only heading lower, right? It's completely okay to have the wrong bias. But it also keeps you out of a lot of bad positions. And then lastly comes the entry function. For myself, I use the unicorn. You guys have been watching me throughout the years execute the unicorn. That's what all the live streams are. Whether you understand the model or not, that is what we're doing every day. And you'll see that whether you think it's repetitive or not, that's the point. When you do the same thing over and over and over again, that's what builds the muscle memory. That's what gives you those justifications to your action. So that when you go to execute, you're not lost in questioning yourself or needing to make decisions. You know what you're looking for. When you see it on the screen, you execute it with strict risk management. Leave all the fear, leave all the emotions, leave all the greed somewhere else. If you know the justifications to your actions, you go in there and execute it with strict risk management. So when I'm executing, this is what I'm executing. Starting with time, I've chosen New York for my session, so I focus on New York AM session. I'm looking to hunt from 9:30 to 12. So I show up to the market an hour beforehand so that I can prepare for the market. When I start preparing for the market, I get on the economic calendar so I can understand time. Then I move to the daily chart so I can get a bias or a draw on liquidity. And then during New York Open, I go in with a bias looking for a unicorn. Simplest terms, a unicorn is simply a breaker plus a fair value gap. Looking for a breaker plus a fair value gap during New York Open that is aligned with my bias. I do not counter trade my bias. When I'm bullish, starting at 9:30, I'm looking for a bullish unicorn. Okay? And when I'm doing that, I'm looking to do it from a higher time frame level. Okay? The higher time frame levels that I use are swing highs, swing lows, and FVGs. When I'm looking for higher time frame levels, I'm looking at them on the hourly chart or the daily chart. Okay, so let's just use a quick example. Let's say that going into New York Open, we're sitting there beginning our pre-market analysis. We see that the economic calendar had a red folder and it happened at 8:30. We do want to be participating on days that have red folders, and seeing that the red folder was at 8:30, knowing that I participate at 9:30 to 12, I know that there's no red folder that I need to be concerned with because it's already happened. So once I understand time, then I get to the pre-market analysis and get to the daily chart. And let's say that we see price below a swing low on a daily chart. That would give me a bullish bias. So then during 9:30 to 12, I'm looking for a bullish entry function. Specifically a bullish breaker that has an FVG aligned with it, bullish unicorn. When I'm looking for that unicorn, I would like to see that it's happening at an hourly bullish FVG or an hourly swing low. I want to be executing my entry functions from higher time frame levels that is aligned with the higher time frame order flow. Okay, so now we're going to go a little more in depth with everything that I just spoke about, but now you have a game plan. These are the actionable steps that you can take daily to engage with the marketplace. And feel free to do your due diligence in researching all of this information. If you just go to my YouTube, you can get the entire unicorn model playlist so you can see the entry function. And then you take that information along with these PDFs and watch all my live streams. There's hundreds of live streams of me doing this live in front of everyone in real time during New York Open. So it's very simple. You can go and do your due diligence. You don't even have to sit here and say, hey, you know, whatever he's saying must be right. Go and fact check these things. Go collect the data so you can have the conviction for yourself. Go create a bias the way that I just stated I generate a bias for all of 2024. Then when you get the results to that information, you can see, is there a statistical edge? Yes or no. Very simple. You can put in the time and do the information gathering, the data gathering. You fact check these things. Just put the time in. Once again, this PDF is in the Discord. So if you haven't grabbed a copy of it already, again, it's in the Discord. You can go to the resources section of the Discord and grab your copy of it, along with the second PDF. So now we're going to go a little more in depth with the information that I was just speaking about. Few seconds, I'm going to take a sip of coffee, and then we're going to go through the second PDF. Okay. Now that we understand our game plan, we're going to go through the unicorn model so that we can define it a little bit further for a better understanding of the model. Once again, this PDF is also in the Discord at the same location that the prior PDF that we just went over. This one's just an intro, so I don't need to go over this slide, but this is simply just saying that this PDF is in the resources section of the Discord. This is also an intro, so I'm not going to go over this as well, but this is simply saying that all of the information regarding this model is also on my YouTube. So whether you use the resources in the Discord with this PDF, or you go to the YouTube and watch these in video format. So what is needed to create a unicorn? Time. Time is our most important element. Once again, decide which session you're going to participate in. We just went over the sessions in the previous PDF. Choose one of those sessions and focus on the opening times. Liquidity. We're going to go over liquidity, but this is the portion in which I had spoke about bias, right? We need to know what price is reaching for. And then the other part to liquidity is understanding that you want to be executing your positions at a higher time frame level. Then we have a breaker. A breaker is very simple. You need to have 4 institutional swing points. Let's think about a bullish breaker. For example, a bullish breaker needs a swing low, a swing high, a new low, then a new high. So when you have all 4 of the institutional swing points, you can create a breaker. If you do not have all 4 institutional swing points, it cannot be a breaker. And we'll go through that later on in the PDF. Lastly is an FVG. We want to see an FVG aligned with the breaker block. That's what creates a unicorn. If you have a breaker block that is overlapped by an FVG at a higher time frame level during the opening times, that is what is needed to form a unicorn. Anytime you don't have either one of those things, simply just stay on the sidelines and wait. So this is going over exactly what I had just said. I guess I got a little ahead of myself. Time. We need liquidity grabs at the opening times, right? So I said focus on the opening times. Liquidity, we want to see that the liquidity grab needs to see a higher time frame level and a lower time frame level, right? So higher time frame meaning you want to see your bullish breaker occur at an hourly FVG. That would be your higher time frame liquidity. Your lower time frame liquidity would be the stop hunt that occurs to create the breaker block. So you want to see your higher time frame liquidity taken along with your lower time frame liquidity taken. And then a breaker. So bullish breakers Your bullish breaker is going to be the highest up closed candle before the leg down that took liquidity. Keywords. This is very important. A bullish breaker can only be an up closed candle. Right? Notice what we're saying here. Highest up closed, keyword, closing price, right? The highest up closed candle before the leg down that took liquidity. Okay? Same thing with the bearish breaker. Bearish breaker is the lowest down closed candle before the leg up that took liquidity. Keyword, a bearish breaker will always be a down closed candle. And lastly, when you have consecutive closes in a row, you use the consecutive candles. So if there's two up closed candles that are consecutive, the bullish breaker would be both of those two candles. And lastly, the FEG being aligned with the breaker block. Okay, so this is what is needed to form a unicorn. Liquidity. So in trading, a liquidity raid or a stop hunt refers to a strategy where large market players like institutional investors or big traders intentionally push price of an asset to levels where they know many stop losses are placed. The purpose of this maneuver is to trigger these stop losses. This is exactly why we use the breaker. We want to see the lows ran out. After you grab that liquidity, that's when we look to engage with the marketplace. Let them take out all those stop losses. And then once we have something defined, that's when we engage with the marketplace. So now we're going to go over a couple examples throughout this PDF of this information. So liquidity can be found above swing highs or below swing lows. So when we're looking at this example, we're going to point out the liquidity that was taken here. Pretty clear that the swing high here was swept when price ran above it here, and this candle running above that swing high is the liquidity grab. So when we ran above the swing high here, we grabbed the liquidity. Notice how it's on an hourly chart. So this would be your higher time frame level, right? So if we ran above a swing high on the hourly chart, after we run above the swing high, we would then look for a bearish entry function. So since this is an hourly candle, I would be curious to see if there was a bearish entry function that occurred when we ran above the swing high. Now, this is the same exact chart, but on a 5-minute chart. Notice I'm pointing out the session, right? 9:30 to 12. You'll see this information occur time and time again. That is why I use this model. So whether it's the examples that we're going over here this morning, or you watching the sessions yourself, during New York Open, these signatures in price happen. When they happen, that's when we engage. If they don't happen, that's when we sit on the sidelines. That's why having these justifications to our actions is so important. We know exactly what we're looking for and when to look for it. Right? So remember I said you need a higher time frame liquidity grab along with a lower time frame liquidity grab. Well, let's go back. Here's your higher time frame liquidity grab when you run above an hourly swing high. Since this is happening at New York Open, 9:30, We would then want to see a lower time frame liquidity grab at that higher time frame level. And here it is, right? Same exact thing as the hourly chart. Price runs above a swing high, grabbing liquidity, right? This candle here, grabbing liquidity at the time of New York Open. So we now have multiple criteria to our entry function being confirmed. We are dealing with New York Open, and at New York Open, you get a higher time frame liquidity grab, and at that higher time frame level, you get a lower time frame liquidity grab. Now we'll put the rest of the pieces of the puzzle together. Go over what a breaker block is, because that would be the next portion. A breaker block refers to price level where there has been a shift in market structure, typically indicating a change from bullish to bearish momentum or vice versa. The concept involves identifying a consolidation area or a block of price action that precedes a significant market move. After the market breaks away from this block, this area is watched for a potential return or reversal, as it often acts as new support or resistance. We are defining the breaker block here. I'm not going to go over this slide because I already defined bullish breakers and bearish breakers. Once again, the PDF is in the Discord, so if you do want to go through it yourself or grab a copy to use as a checklist while you're dealing with price, again, it is free in the Discord. So, once again, we're still using the same chart. We're slowly putting all of the pieces together here. Same session, right? You can see the gray box. This is New York Open. We're trying to focus on New York Open. We already identified the higher time frame liquidity grab, and we identified the lower time frame liquidity grab. Now we're identifying the breaker. So, heard me state that you need to have all of the 4 institutional swing points. You have a swing low here. You have a swing high here. Swing low here. Swing high here. New low here. Right? So we have a swing high, we have a swing low, we have a new high, then a new low. You also heard me state that a bearish breaker will always be a down close candle, and the specific down close candle we need is the lowest down close candle before the leg up that took liquidity. So we identified that this was the liquidity grab, right? Because price ran above this swing high here. So we need the lowest down close candle before that happened. Here's your breaker block. Since there's 2 consecutive candles in a row, you'd use both of these candles. We need the lowest down close candle before the leg up that took liquidity. We know that it's before the leg up that took liquidity because of the institutional swing points. Right, so here's the swing low, here's the swing high that took liquidity. So anything from this point to this point, we need the breaker to be before that. Now we were once again putting the pieces of the puzzle together. So we're pointing out the liquidity grab, right? Here's the raid, the swing high where price ran above it. And here's the bearish breaker. Okay. Notice how it's all happening during the opening time. Here's 9:30. So I'm going to go a little quicker through these slides because it's the same exact thing, just a bullish entry function. That way you can see a bearish entry function and a bullish entry function. Okay. And then the other thing that I'm also going to point out is that we're looking at GU here, right? So this happens in all of the markets. It happens in the forex market. It happens in the indices market. It happens in the crypto market. It doesn't matter what asset you're choosing. If you're dealing with price action, you're going to see this model. That is exactly why I use this model. It's how price delivers. Next thing I'll point out is that it happens in all sessions, right? Now we're looking at London session, 2 o'clock to 5 o'clock. So it doesn't matter what asset you're trading. It doesn't matter what session you're trading. This signature in price action happens in all of the markets, in all of the sessions. That's why I'm telling you that take some self-ownership. Just understand what works best for your daily life, then implement this model. It doesn't matter if you're using it in crypto. It doesn't matter if you're using it in London or New York. What does matter is that you have defined justifications to your actions. You know how you're going to engage with the marketplace. And that was the purpose to this entire live stream this morning, is that I'm quite literally handing you the actions that are needed to be day trading the markets. And we're establishing these actions now so that throughout 2025, we know exactly how to conduct our business. Okay, so now here's a bullish example. And once again, I'm pointing out the signatures, right? You need all of the institutional swing points. So you have a swing low here. You have a swing high here. You have a swing low here. And then you get a new high. So this is a breaker because it has all of the institutional swing points. And we're looking for the highest up close candle before the leg down that took liquidity. And you can see it's highlighted here. Right? And then lastly, you'll see in all of the examples that there's an FVG aligned with. So here's the FVG here. See that this candle does not overlap this candle. So an FVG is a 3-candle pattern in which the first candle and third candle do not overlap. So this space right here during this imbalance is the FVG. And now here is where we talk about displacement. Displacement is key to this model. There has to be an FVG aligned with the breaker. If there is no FVG aligned with the breaker, then it cannot be a unicorn. Okay, so it's very simple. That's why we have these justifications to our actions. If there's no FVG aligned with the breaker block, I do not execute because it's not a unicorn. I only execute the unicorn model. So when we're sitting there during the session trying to understand what is a trade and what is not a trade, that's why we have these justifications. I would rather take quality over quantity any day of the week. Less is truly more. This is one of the hardest businesses to run. It's always going to be hard. I'm in my 7th year now. It's still just as hard as the first year, the second year, the third year, the 4th year, the 5th year, and the 6th year. Doesn't get any easier. It's going to be hard. That's why we have these justifications to our actions. We can't control price action, but what we can control is our decision making. If we can have a mechanical way of making decisions, then it takes all of the emotions out of the process. And that's what we need. We need to be executing objectively. Objectively means without influence, right? So not influenced by any emotionally based decisions, because you know that you're only executing a unicorn. It simply comes down to discipline at that point. If there's no unicorn on the screen, there is no trade. There is no, people get too euphoric, people get too excited, people get, they experience all these different emotions when day trading. That leads you to discretionary based decisions. Nothing wrong with being discretionary if you don't let it negatively affect you. Meaning, if you get too greedy when you're in a position and you try to reach for more than you should be reaching for more, then that position is going to come back and stop you out. And you were too greedy to take the profits when they were given to you. Same thing with being fearful. If you don't know what you're doing, or if you rely on money too much, then you're going to be too fearful to even execute. This is where having something that's mechanical comes into play. It'll get you to that point of executing. Right? You know when to execute. You know when you want to risk. When all of the justifications to your actions are completed. Give me 2 seconds. I'm just going to take another sip of coffee. All right. Thank you very much for your patience. Once again, all of the information that we're going over this morning is located in the Discord. So if you also need this PDF, if you need a copy of it, just go to the Discord and grab it. This could literally be your checklist. This could be your action plan to how we're going to engage with 2025. That's exactly what we're doing here. We're putting together the pieces of the puzzle so we have an actionable plan to engage with the market in 2025. So now we're going to look at some examples of displacement, right? We have to have an FVG aligned with the breaker block for it to be a unicorn. And what I have to say about displacement is that it should be so clear and present that you cannot miss it. Right? So, for example, look at this one candle right here. Now compare this singular candle, this down close candle that I'm hovering over. Compare the size of this candle to the rest of the candles on this screen. This is clearly the largest candle out of all of these candles. Right? So the concepts should be so clear that you can't miss it. That's when you want to be executing. This is very clear displacement that occurs after running above a swing high. Right? So you have a swing high, you have a swing low, you have a new high, then a new low. And you clearly and decisively get displacement through the bearish breaker. When that happens, you get an FVG that's aligned with it. And we'll point that out here. Next couple slides, right? We're pointing out the displacement. It's a very decisive, one-sided move. After we ran above the high, we clearly get rejected and we displace lower. Very decisive and energetic. It should be so clear that you can't miss it. Same thing here, just as a bullish example, right? Once again, it's very easy to say that this is the largest candle on this screen. It has an FVG. That is the definition of displacement, the presence of an FVG. So it's very clear here that we get a very decisive and energetic move after running below a swing low, right? Swing low, swing high, new low, new high. So there's nothing here that, you know, it is a phenomena. It's not something that happens sometimes. It's not something that is rare. This is how the market delivers. This happens daily. And depending on what time frame you're on, will determine how many times you'll see it happen. Right? Obviously, the lower time frames, you'll see it happen more often because there's more candles. Obviously, the higher time frame, the less it'll happen because it takes more time to create a candle. Either way, the unicorn's going to keep happening. Ever since the market was created, this had been happening. It's how price delivers. Sorry, I scrolled too far. I just got to make sure. Yep. So this was the last slide. Get to the next slide. So the FVG, it refers to a price range in where the market has minimal trading, creating a gap or void in price chart. This gap represents an area where price did not establish fair value, suggesting that the market might return to this range to fill the gap and establish that fair value. So we're going to point out the fair value gaps now. It's one-sided delivery is what that refers to. It's the same thing as me saying displacement. It's an energetic one-sided move, right? And this is the same chart. So I already pointed it out. So I'm going to go a little quicker here because I already pointed to this chart. But the fair value gap is very easy to see. It's a 3-candle pattern in which the first candle and the third candle do not overlap. The second candle is the displacement. The second candle is the one-sided move, right? This only offered lower prices. It was very energetic and decisive to the downside. That's what creates the gap. So we'll do the same thing with a bullish fair value gap. See it here, right? Swing low, swing high, new low, new high. When we displace through the breaker block, there's an FVG aligned with it. And so we're going to begin to wrap it up here. We've put all the pieces of the puzzle together. The important things that we need to understand: it's time, bias, and entry function. It is the game plan that was provided. Time is our most important element. We only want to be executing during the opening times. So pick which session you're going to participate in and focus on the opening times. When I say opening times, I'm referring to the open of the session. When the session begins, that is the opening time of the session. So I focus on New York Open, so at 9:30. I'm beginning to look for this model. The breaker is one of the strongest algorithmic entry patterns, especially if you have taken out liquidity at the opening time. Right, so I have no issue with saying it. This was learned from ICT. His information is very valuable. You'll see a lot of ICT quotes in here because he points to how efficient this model is. He points to how strong of an entry function this is. And you'll see him use it all the time. Lastly, we don't trade outside of the opening times, right? So I'm not looking to participate after the market closes, not looking to participate during lunch. Anytime that it's outside of my hunting hours, I do not even think about price. Only focused on my hunting hours. Outside of that, I'm working on health. I'm with family. I'm working on other businesses. I would suggest doing the same. Second most important element, draw on liquidity. Price is only ever doing two things: running above a swing high or low, or rebalancing an imbalance. That is your internal liquidity and your external liquidity. Right? Internal liquidity being fair value gaps, external liquidity being swing highs or swing lows. We want to make sure that we're obtaining the draw on liquidity from the higher time frames because we want to be on the same side as the higher time frame order flow. Sorry, I scrolled too far again. So next we have our time frame alignment. This is how we understand which time frames to analyze. Okay, so you have to understand for yourself as an independent thinker which time frame you execute the best on. Right? So if 1 minute entry functions, if those are too fast, too volatile, you need more time to make decisions. You need more time to identify your concepts. Go to the 5 minute chart. Right? So a 5 minute chart, if that's enough time for you to decisively and calmly understand all of your criteria and wait for that criteria to be confirmed, then maybe a 5 minute chart is better for you to execute on. You have to look inward to understand as an independent thinker what works best for yourself. Whichever one you choose, you can see the aligned higher time frame. So when it says 1 hour PD array, that is the higher time frame level that I was referring to. So you want to see a higher time frame level of liquidity taken, right? So an hourly swing high goes with an 5 minute entry function. So this is how we understand which time frames to analyze. If you like to execute on the 5 minute chart, then the higher time frame would be the hourly chart. That is where you get your higher time frame level from. And then so on, right? The higher the time frame, the higher time frame level will keep going up as well. You have to understand where there is liquidity. The best breakers are going to see two levels of liquidity: the short term and then the higher time frame liquidity. Said it multiple times. This is a direct ICT quote, so go ahead and fact check me. Go to the resources section of the Discord and you'll see all these videos from ICT. Very easy. Do the due diligence and just reviewing the information. It's all placed in the Discord. So, with that being said, I'm going to begin to wrap it up here. I have one or two more slides, and this is just examples of the entry function. All right, so here's an execution that was completed. You can see that You have New York Open here, 9:30. At New York Open, you can see that we ran below an hourly swing low. At that hourly swing low, we get all the institutional swing points. Swing low, swing high, new low, new high. We need the highest up close candle before the leg down that took liquidity. So you can see this up close candle is highlighted as the breaker. And then you can also see that there's an FVG aligned with the breaker. Once we have a confirmed entry function, we enter at the beginning of the breaker block with a stop loss below the breaker block. So you can see right here the position indicator tool. We enter at the beginning of the breaker block. Stop loss is below. And we aim for 2R. See the executions here. The long was entered when price retraced back to our entry function, providing an entry. After the entry was given, price did a great job bouncing from our entry. Beautiful execution. Very defined model there. And this just goes over the things that I had just mentioned. The analysis of the prior example. Hourly to 5-minute for time frame alignment. New York Open. Price swept a higher time frame level, which was the swing low from the hourly. Stop hunt occurred at that location. Then we got displacement through the breaker. There was an FVG aligned with the breaker. Once all the criteria is confirmed, we can then enter. We enter from the breaker block with the stop loss below it, and we look to aim for 2R. Right, so now I've given the model. I've given the game plan. I've showed the executions for it. This is where you take the information, gather the data to see your own results. Once you become profitable in your results, that's when you then begin to start taking risks. Notice how I'm saying do the due diligence first. Just because I'm saying these things doesn't mean you instantly go to risking. I highly suggest you grab both of these PDFs, start collecting data, and see if you can execute this model. Okay, because it comes down to the operator. Operator is what creates a profitable model. Your ability to remain disciplined, your ability to remain patient, your ability to properly manage your risk. And to properly manage your risk, I believe creating the muscle memory, right? Go through all the research, show yourself that you can execute this model before ever risking any money. Put in the time, put in the work. Okay, so we're going to begin to wrap up stream there. I hope everybody enjoyed. This is how we're going into 2025. We're taking the unicorn model. We're going to implement it daily. You want to watch this happen? You can watch these live streams on YouTube. We do them every Wednesday. If you need more contact with me, there is a public Discord. You need mentorship. There's a premium Discord. Mentorship gets more live streams. They get additional tools and resources. Those are the people that are serious in developing their business. We're going to end the stream with a giveaway. We do have 2 iFunded Futures accounts to give away. We'll do that now. A few seconds. I'm going to take one more sip of coffee and then we'll run the giveaway. All right, very good. Hope everybody enjoyed. Hope everybody understands the model. If you don't, like I said, we have additional tools and resources in the Discord, so just go to the description of this video and the links to those Discords are shown there. Let's get ready to run the giveaway. See. All right, so we're going to see who is going to win the giveaway. I'm getting it set up now. Let's see. 2 more seconds. All right, here we go. It's almost set up. All right. This is what we're going to do for the giveaway. We have 2 accounts to give away. The first winner will have to be in chat. What we're going to do is we're going to type 2025. Since it's a new year, we'll use 2025 as the giveaway. So type 2025 into the chat to enter into the giveaway. We'll give it a minute or 2 for everybody to participate. All you have to do is enter 2025 into the chat to participate in the giveaway. Give it some time for people to enter that number, and then we will run. It's called, what is it called? Nightbot. So it's a random generator called Nightbot. Anybody that types 2025 into the chat gets inputted into the giveaway. We're going to give it a couple more minutes for people to join. Type 2025 into the chat. So you only need to enter it once. It doesn't matter how many times you enter. You only get 1 entry either way. So it doesn't matter how many times you type 2025. You only get 1 entry anyways. Last couple seconds here, and then we're going to draw the first winner. Once again, all you have to do is type 2025 into the chat. You only get 1 entry, so it doesn't matter how many times you type it. Just type 2025 into the chat. And here's our first winner. Looks like Rashid. Rashid is the first winner. We do have a second one to give away. So give me 2 more seconds and we'll run the second one. Congrats, Rashid. Rashid, let's see. Rashid, if you could DM me on Discord or on Twitter, either one works. Looks like Rashid is the first winner. All right, very good. Let me prepare the second giveaway. We have one more giveaway to do. All right, and here comes the second one. We are going to do the same exact thing. Okay? So, let's see who the second winner will be. And we got Marius. Marius is the second winner. And there we have it. So, congratulations to Marius and Rashid. If Marius and Rashid can DM me on either Twitter or Discord to claim the giveaway prize. Looks like Rashid did Discord message me, so thank you very much. I will respond right after the stream to set up that giveaway. If Marius could also DM me either on Discord or on Twitter. So, don't worry if you didn't win the giveaway. If you haven't noticed, I look to provide value every single chance that I could get. We do these giveaways quite frequently. That is my way to provide value for others, giving people the opportunity to gain a source of income through these giveaway accounts. We're going to continue to keep doing it because I want to add as much value as I possibly can in 2025. So, if you didn't win today, you might want to show up to any additional live streams. We do this weekly on Wednesdays. We will be doing it all of 2025. Now you guys also understand how to engage with the market in 2025. If you need to grab these PDFs, just go to the Discord and you have an actual game plan to move forward in 2025. So, thank you guys very much for a wonderful morning. I'm ready to crush 2025. We will be showing up every single week, providing as much value as we can. Do me a favor, like the video, sub to the channel. That way you can be notified for any upcoming live streams. Thank you guys for a phenomenal morning. Happy New Year. Time to crush 2025. I will see you guys on the next live stream. Have a nice day, everyone.